Morning all. Just going to wait a few moments till 1:30 and we can start. Okay. Just remember, you can post like Anna Marie's done or unmute and chit chat if it needs more depth. And it's a forum, don't forget. So we discuss ideas. Try and say every day, hope that people gain the confidence to interact because that's the only way you can learn. Okay. Just give it another minute. We can start. I'm going to start sharing the charts now. I hope you can all see it. If you can't, just let me know. I hope you can all hear me. Well, can't hear me, won't know you can't hear me. So morning, Pedro. Loud and clear. Okay, good stuff. And I can read you loud and clear there. Mora, mora, mora. And a mora to you, Mr. Vuzi. I won't pronounce your surname Vuzi in case I pronounce it wrongly and have the Mickey taken because it's rather close to a rather well-known phrase we have in English. If you see what I mean. You like that, Anne Marie? Okay, certainly have a look at that. Oh, it's 1:30 now. We can start. Well done. Yeah, the Rambo Club. Yep. I still say Gerard and Company. It's a Rambo Club, but we must be careful not to join the Kamikaze Club. I've decided the Kamikaze Club is when Gerard, even he finds it too aggressive to join. So if you trade, I'm just making this off the top of my head. It's a bit of tongue in cheek going on here. So if Gerard says no, it's a bit rich for my blood, you know that's for the Kamikaze Club.
Morning all. Yes, Gerard, it went well.
Yeah. Actually, yeah, the trades yesterday didn't go too badly. I'm at $1 yen now because I modified my stop to 143. It might have been a bit close. It was about 30 pips away. Then I cut my position, and then at about 142.28 or something. I can't remember now. 43.28, sorry. And then I modified my stop and just got stopped out, but it was a nice profit, so I was happy with that. I think the other two are still running, but they're looking good at the moment. So yeah, the trade's not too bad. Okay, now you want my name is Fusi, but you can call me Ishmael. No, I wasn't meaning that, Fusi. I was meaning about your surname, and never mind. I'd rather leave it alone on that one. Claimed out for yeah. Okay, so you claimed out as well. Oh, that's all right. So the trade's done well for you then. That's good stuff. That's a lot of money. That's well bloody done. Yeah. So the trade's not too bad. All of them pretty good. I'm out of that one in the other two. And yeah, it's got to be a bit patient because you always can't get the bottom of the tops. Your CHF started to look a bit negative, but it's picking up nicely now. So you got to stick it out. Yes, I get that, Fuzi, but it's just the name itself. If you and yeah, you explain, Anne Marie. Okay, GBP NZD. Right. Right. Do you want to sell it? All right. Oh, bloody, it's quite high up. Hey. Yeah. Um, I'm not quite sure why you want to sell it, to be honest. Just give me a second. I'm very sorry, guys. I'm very sorry. I've just got to go to the loo. Just all these cups of coffee. I should have done it just now. Hang on, let's write that down before I miss it. You're a JPY, went good. EURAUD. EURAUD. I'll look at all of them in a minute. Okay. I'm not quite sure why you want to sell this one, Pietro. Yeah, for a buy, it's doing very good, but I'm not sure why you want to sell it. So I'm not quite clear on.
Roger, on the 4-hour chart, I saw there's a candle that's it could be a possible reversal for a short period of time, right down to more or less about the 10 moving average, give or take.
What do you guys
Does
think of
that-
that? I'm going to just hold back my opinion on that. What do you think, finally, Gerard, Anna Marie, or Dirk? Anybody's traded before? Martin, Dirk? What do you think? Do you think that's a good idea? Anyone think it's a good idea going on Pietro? He's looking. I've got a 4-hour chart. Sees a few sellers coming in. I'm afraid I agree with you, Gerard. I know that's just a bit of profit taking. And look, the buyer's already coming. Look at the shorter term chart. See, look, already coming in. Try the 15-minute. Hovering around there. There's no indication it's going to go. It's a bit of profit taking because it got a bit high. Try the weekly. See, that's pretty high. But that's the overall trend is up. That's just a bit of profit taking. I'm not going to buy at that level, to be honest. But to me, I'd rather buy it at a better price, but certainly not going to sell it. That's a very strong Agulhas current, if everyone knows what I mean by that. The Agulhas current famously be quite a strong current, and I wouldn't be selling against it. No, I certainly wouldn't be selling that one. No, I'd be waiting to buy a pullback. You get my point? As long, look, I'm not stating right or wrong here, Pietro. What I'm trying to do, I think you get that, but most people, it's not right or wrong. I'm stating opinion and I'm trying to give a reason why, so we can all learn together. I can't say what the gold price is going to be in the next hour. Nobody can, but we can have a sort of point of view and put it up so we get a likelihood of probability. It's like going into business. Nobody guarantee a business is going to be successful, but what you do is you evaluate risk and you see the potential the upside is higher. So then you invest your money as in that particular business, same sort of principle. And that's what I'm trying to get across there. And I certainly that to me is just a bit. It's a guy having a very successful business, but he wants to go to Australia to see his daughter, and he's just drawing a bit of money from the business to go overseas. Doesn't see the business is suddenly going to be going bankrupt. No, he's just drawing a bit of money out to go and spend it or whatever. I'm certainly not buying it. It's a bit high, but not totally against buying it. But I prefer to get a better price. But I wouldn't be selling it for those reasons. Ah, brilliant, Gerard. I like it. Gerard, try to pronounce it properly. I like it. I think the sarcasm's the best form of wit, not the lowest. I like it. Yeah. Yeah. Go look at Instagram if you want some genuine news. That's a good idea, Gerard. Brilliant. Yeah. Moving along. Okay. If anyone disagrees, say so. Okay, we can move on. You want to look at the EURAUD? I looked at this morning. I didn't come up with any brilliant. We haven't got any trades out this morning because I couldn't come up with any. So if we can get some trades out, great. During this session, that'd be great. People say, where are the trades for the day? Well, I haven't got any, to be honest. So maybe together we can find one. Let's start with this one. I looked at it clear. I always look at that one to start off with. I look at what I do is I sort of like explained yesterday, start with that and go on down. Now, EURAUD, I can't remember you want to sell it or buy it or whatever. Let's just check. What about NZDCHF? Oh, God, I can't. There's not enough meat on the bones. I'm certainly not going to buy it. And if I remember rightly, there's not enough meats on the bones there, Neo. But I'll look in a moment. Your AUD is a sell. I thought probably a sell. It's a bit high up, probably. But yeah. Again, same principle. That's very, very strong. Let's look at the weekly. Extremely strong. It's coming off a bit now. I get that. my problem is that's all very fine, but let's say you put a stop up here on the, let's make it a daily, probably a bit clearer to see it. You're going to put a stop up here above there, right? That's about 60, 70 pip stop. Where are you going to aim? Down here, that's not enough. Down here, yeah, you can probably aim to about there. What makes you think it's going to pull back to there? Let's have a look at the 4 hour again. Okay, some profit. How much is that is selling and how much is that profit taking? Remember, when you profit take, guys, you are selling on a long and buying. Remember, you buy on a short to exit. So if you're short this and you want to exit that, you're not buying to enter, you're buying to exit. I hope you understand that difference. We call that short covering. Okay. When you buy to exit, not means you're buying to buy more stuff, but the buy will knock it up. We call that a short covering bounce or a profit taking pullback. Are we certain that's a lot of sellers coming on board, or do you think that's a profit taking pullback after such a good move up? Remember, the only green candles moved up for 4 days, 100 pips. Okay, so let's have a look at a shorter term chart. It's still coming off again. So, you know, you could well be right, but I wouldn't trust it to take it down there myself. But you're going to have to do better than that. You're going to have to go to really got to take down there to get a risk reward. It could well do, but the risks involves the expectation it's going to have a pullback all the way there before it jumps again, because the moment the euro is slightly stronger the AUD, unless something fundamentally changes, we don't know that. We only can work on what we know. I personally wouldn't do that. What about, yes, that's true. That's this morning.
Roger,
Yep, go for it.
I just wanted to ask, so you know when you said the shortcoming when you buy and then you obviously take profit on the sell, and then many people do that, which is why when it gets very high, which is why there's like a pullback red candle if you're going for a buy. Is that correct?
Correct. I did, but that's correct. But as long as you know the principle, you've bought a house, right? Now, when you sell it, you're exiting that house, and that's going to depress the price. Now, you alone, no disrespect, Nikki, and your large area where you live, sell one house, so much difference. But now, Nikki, I've just promoted you to a very rich lady, and you happen to own 50 houses in the area, and you want to go and emigrate to Timbuktu or wherever, and you decide to put all 50 on the market, and you want to sell in a hurry. You got plenty of money. You want to get out. You tell the estate up, move the bloody thing for me, negotiate, don't mind, or whatever. Those 50 houses being sold will depress the area. Now, same principle the other way around. So I'm going to short this right now at that level. It comes down here, and what am I going to do? I'm going to take my profit. When I take my profit, I'm not selling to get out, I'm buying. A lot of people are not getting this because understandably, totally, I'm not knocking it, it's completely understandably, we're brought up all the time to go along. We buy it and sell the profit. Selling it and watch it come down and make a profit goes against the mental grain. What? Doesn't make sense to a lot of people, you know? But in this case, we're buying to exit, okay? And that buying to exit means you're getting a profit-taking bounce. Now, we don't know if the buyer's going to come in, which clearly in this case, it did occur. We don't know that at this stage of the game, and it could get a jump from a short covering profit before the sellers are waiting to sell, get back in again, a better price to sell it further down. Do you understand what I'm trying to say there? Because it's very important you get that principle. There's a very difference in a profit-taking bounce than the sellers coming in because we're getting a bit of a change of trend or the fundamental changeover of the strength of the currencies or the product or whatever, and then we can start seeing a move down again, like a move back up on this one. Are we getting the concept on that? If I'm not, someone try and explain it for me much better, because this is actually a very good, important point. You're quite a good speaker, Peter, so you to be quite honest, Nikki. If you got the principle, I'm pretty sure you'll probably pay a bit more, shall we, articulate than I have. But however, will I explain it, you explain it, doesn't really matter as long as it's understood, because people are not getting this. I'm pretty sure not people understanding why you can make profit on something on the way down. You know what I mean? And they're either frightened to ask or they haven't really thought about it deep enough. They're just taking the buckaroos or how know it works anyway. But do we all understand that concept? Exiting a short is buy, exiting a long is sell. Are we all understand the reason why I talk about short covering bounce, profit taking, pullback? Are we all clear on that?
So, does it only happen when there's when there's quite a few, like when there's a a big jump up or when there's a big jump down, when there's a big
No,
buy and a big sell.
No, nothing to do with it. It depends on the amount of people getting out. Simple as that. Like I use the example of Nikki selling herself, selling one place, or Nikki, very rich person wanting to emigrate overseas, selling 50 places. We don't know out there who's there. There might be a billionaire in Saudi Arabia suddenly going to unload the euro. There might be a guy with 50 rand account unloading. Clearly, they're both selling, but clearly have a different effect on the market. So we don't know that. That's why we use the Fib retracement. The Fibonacci retracement, we don't know how far the pullback is to buy because we're not going to sell it because it's clearly a strong upward momentum. So we want to buy the pullbacks. We use a Fibonacci extension, a retracement, do beg your pardon, retracement to find where the retracer is before the bounce to buy in again to send it back up again. That's because we don't know how many people are getting out. There might be a lot, not very much. You often see where it gets to resistance, it pulls back a little bit, but the momentum's so strong, there's only a few people unloading their position. The rest are holding on because they see the momentum still there. They move their TPs, etc. Just always try and think of this buyers and sellers, and that's what creates the momentum. Get rid of the idea it's a bit high or it's right or it's wrong or it's a good product or a bad product or anything like that. Irrelevant. The buyers and sellers. It might be the biggest piece of junk on the planet, but if people are buying it, the price go up. It might be a fabulous Fabergé egg, but if nobody wants it, the price will go down. It's as simple as that. You know, it's not your opinion of the quality of it. It's just what the buyer and seller do. That's why we talk about the smart money. What do you mean about smart money? Not do intelligent smart. It means basically the big money. We'll go back to Nikki again. Nikki is a billionaire and starts buying. She's going to affect the market price. Roger's a broke oak with a tiny amount of money. It starts buying. It won't affect the price. You get the idea. Is that all clear now? Because it's quite important. Overbought. They keep saying whatever. I use it a lot as well, but that's all in the head, really. I mean, I think Nikki's house is overbought £1 million. Nikki thinks it's worth 1.2 million. Gerard thinks it's worth 1.5 million. Fardy thinks it's worth 700,000. It's all the values all in the mind. You know what I mean? So I use it a lot, but it's not really that relevant. It depends what the majority. If the majority think it's overvalued, it'll come off. If I think it's overvalued and the majority think it's great, it'll still go up. That gets a better perspective. German's already done this, already finished. Don't worry, the German ones. I'll check. What was it come out? I'll just check for you. 6 point. It came out exactly the same, exactly as expected. So don't worry about that. Ignore it. Ignore the German CPI. It's done. But no, the big money. I'm not sure the smart money is always correct. There's a lot of people out there with money who are not the world's brightest. A lot of poor people are pretty clever. So we use smart money. What do you mean big money? Joe Soap as thick as 2 short planks, and he's trading with $1 billion. Gerard Slabbert is a genius, and he's trading with $1,000. Who's going to have a big effect in the market? That's the best way to look at it.
Roger?
Yep.
It just comes down to the fact that we don't know what is going to happen. It can go up,
No.
it can go down. It's
No, we don't.
50-50. It's
No, it's not
always
50-50.
50-50.
Yeah, no, we're not quite 50-50. With a bit of skill and experience, it's slightly odds in your favor. But you're quite right. I'm going to be honest with you. A lot of it's crystal ball gazing. Short-term moves the market. A lot of it's crystal ball gazing. You're quite right. So we have to take an all principle. And if you look back at the trades, as I say, that we've got out in the last, I don't know, last 5 or 6 or 10 or whatever, you kept the journal, just let these guys in, you'll find there's been more into profit than not being into profit. How you handle signals, whether you take your profit too quickly or not, or interpret the signals, entirely up to you. But I found for mine slightly more in the blue than in the red, so I'm happy with that. But yeah, it's a lot of it is crystal ball gazing short term. That's why most of the program are talking about equity long term. You know, Apple, I say in the long term is going to be pretty good. So I say the same for Amazon, Microsoft, Tesla, etc. But in the short term, there's a lot of ups and downs in between. Absolutely. That's why leverage trading is speculative. It's not investing, it's speculative. And frustrating at times because people are not always getting it. They're jumping in and trading without getting the overall concept of it. And that's what it's not the actual product. It's nothing wrong with a motor car. You just don't know how to drive it properly. Same sort of principle.
Yeah, I understand that. It's
Not
just
you
that,
personally, I'm saying, yeah.
Yeah, I mean, from we started September last year. When we started trading, it's actually only now since you've been speaking or talking about it, that it's come out into the open, you know, the when you buy, so, like you said, you know, it's a bit confusing at this stage because it's not something that I've been watching, or I mean, you've been talking about it now for quite a while, but it isn't something that's been talking about since last year. I don't know if I missed it, but
No.
for me now, suddenly it's a new concept to try to figure that out when you watch a trade.
It's a bit of record. I managed to keep my mouth shut for over a minute there. Well done, Roger. No, absolutely brilliant. Brilliant. Thank you, Anna Marie. Be honest, I have to be honest, Anna Marie. I think the wave will start with Nikki. I think we're going to have to go through these concepts because clearly, when people have been trained for a while, like yourself, asking these kind of questions, clearly they're not being picked up elsewhere. And these are vital concepts. I mean, as I said before, to give an analogy here, it's nice to study the inner workings of the under the bonnet on a motor vehicle, but if you don't know the concepts behind getting from A to B, actually using the vehicle, as in driving it, it's a bit pointless unless you want to become a car mechanic, I suppose. That's an incredibly valid point. That's why you had me actually keep my mouth shut for more than a minute. Finally, you'll probably laugh at that. It's quite an achievement because I am somewhat loquacious, as you probably noticed. Okay, right. I'm going to now go back. I just want to remind me. I doubt if I'm going to forget. Nikki, others who find this important, I'm pretty sure you all do, to come back to it. Before I do, I just want to go over the EUR AUD, because it's a trading room, and go through some of the trades we've been in. And then I'm going to go back that, because clearly when somebody like Anna Marie has been doing this for a couple of months, and this hadn't been brought up, it applies to everybody. And I'd assumed it'd been taught they knew, and clearly that's not the case. It's a bit like cutting the position. Guys on platform, they've done all. I'm not knocking anyone, saying whatever. And not realize they can close part of their position. Little things like that, little tweaks like that, which don't take hours to explain, can actually make a big difference. I use golf a lot. Practice. And the instructor comes up, or the pro comes up and says, when you're on the backswing, you keep your left arm straight. It'll make a difference. A bit awkward, give it a go. And suddenly, hang on a minute, that tiny little tweak there makes a big difference. That's what I'm concentrating. This is not full-on training. That's for the classes. These tweaks and concepts, and that's why it's valuable what you said. Thanks very much for that contribution. We'll come back to it. Okay, right. Okay, so we just want to look at EUR AUD. I looked at it as well this morning. I didn't find anything there, but maybe we can. EUR AUD, was that we've just been talking about that? Sorry. Okay, we'll leave that alone. The momentum's up. Buy the pullbacks at this stage. Right, we had a couple of trades out yesterday. Mailbox. You see, I have it lower down here. I don't like to look. I've got a couple of trades left. The others I'm out of. I don't like to look at them all the time. That's another little tip I'm trying about, because it'll play with your head. Very different you start. I know it plays with your head. So rather, you got your strategy, you got your volumes, you got your position size calculator, you got that from the live chat on technical support, and you've made sure your position volumes are correct. Then you know if you lose, it's not going to hurt you because you worked it out before you entered the trade. Vital. Right. Don't have to stare all the time. Just check it now and again to modify accordingly. Remember, not too close. Whatever that's supposed to mean. It's a good question, actually. Yeah. Whatever that means. Yeah. What's too close? Well, at least 20, 30 pips away. All right. We had Euro CHF. I think I'm still in that one. I'll check, actually. Oh, well, I'll check just now anyway. Euro CHF. You can always check if you want by just doing this quickly as well. Trade levels. You see, that's where I entered. That's where my stop is. So I'm protected. I can let it run. Okay, so I'm nicely protected. I'm going to win on that whatever happens. And clearly that's doing okay, because I know what we got in there. I got a slightly better price, 23, because I missed it and got in a better price, which did me a favor in this case. But anyway, no, that's a stop loss. I'm talking rubbish. A stop loss, it's the wrong way around, sorry. Yeah, I got in the right figure, 16, 23, whatever. But anyway, I'm in a profit. I'm start reducing that a little bit. Bring it down here. So I've reduced the risk, okay? So I'm in a slight profit at the moment. On the 4-hour, the 100 4-hour seem to be holding, so hope to get some more downside. But anyway, whatever the reason, it's in a slight profit. The dollar, what was the other one? NZD CAD, do it in alphabetical order. That was doing quite well as well. What we get in on 81.55? It's been popping around a bit, but still in the profits. That's not so bad. I can modify the stop. I'm not going to make a profit or get stopped out, but I'm reducing my risk. Okay. And then the dollar yen amount of, because I did modify on that one and I wondered whether I should or not. I put it up, got stopped out, went down a little bit low and popped up again, but never mind. Anyway, I kind of quite a good one on that one. But the bottom line is the entry was on this one is 42.20. It's now 43. At this morning, the height is over 110 pips in profit at one stage. So all the guys there would know that. So if you're in that one, clearly you should have modified. NZD CAD. Let's do that quickly. You got an 8. Thank you. That's it. That's the info I want. Tell me where to get in. People say, should I modify? Well, I have no idea where you got in. So I say modify to that. And unbeknown to me, it's 5 pips away we entered. You didn't tell me that. Now you stopped out. Look, people, for some reason, I don't know if it's a cultural thing, are very unforthcoming with information. And it's not private stuff. It's it's stuff that we need to give. So I've got full facts, so I can give you an informed decision. Anyway, 81.63. Yeah, I can bring it down to break even. Well done. Yeah, 30 pips is good enough. Yeah, bring it down to break even. Good one, Nikki. Absolutely agree. 81.63. I'll do the same. All that chit chat. Do the same. There we are. There we are. Thank you. Okay, dollar yen. Right, dollar yen. Right. If you're in that one and you enter the signal, it should also be 80 pips as we speak, up in profit, slightly more, in fact, should be up by 85 pips. So anybody in this, I suggest, clearly modify your stop. Anybody in this who attends the trading room and ends up taking a loss on this one, clearly is not understanding what we're doing or not following the signal or whatever. Because this one, you should now guarantee a profit by, I'm not allowed to use the word guarantee, but the error probability is 99.99 in case a bomb goes off and you get slippage. That's what they mean by that. But the chance of that is so unlikely. Don't worry about it. So yeah, should modify into, I don't know, keep a bit of a room. Maybe make it 80, 142.80. There you are. You got 25 pips. The 143 seems to be holding. The dollar index has jumped, which is good for the trade because we're going along. You should all have the dollar index. So hang on, let's let these guys in. Should all have the dollar index. So I think you should be okay at 142.80. Hope you got that. Not moving stop loss one, a decent profit should be shot at dawn. In fact, I don't fully agree with that, Peter. I'm not going to wait till dawn. I'm going to shoot them straight away. Straight, put them straight in front of the wall. Ouch, yeah. No, we don't. No, we're Rambos here. We're not bloody wusses here. Straight in front of the wall, machine gunned. Hey, Gerard. Yeah, it's a tough business, I tell you. Special operatives here. Don't take prisoners.
Roger.
We all do. We all do, Sharon. Everybody else when they start. Take profit too quick, hold on to their losses, and they win 10 out of, and they lose 1, and they still lose money. And they all do when they start. And sorry, carry on.
Yeah, I'm just smiling. I'm just smiling because we were taught listening, don't move your stop loss too quickly. As you said, how far can you move your stop loss away, or how far can you, it's something that you really can't teach people. Once you're there, that you know you've got to modify your stop loss, your TP or whatever. It's sort of everyone for himself. You can't teach people how to do it or where to go.
100%, spot on. That's his experience kicking in. Are the US not?
Sorry, I was just smiling because you always say don't watch, don't sit and watch your trades, but you have to. I mean, in a certain extent, you have to be there to see. Okay, I'm going to have to move this or whatever. So I've lost some money by not being in front of the computer.
Okay, absolutely agree with all of that. Not a word of that I disagree with. Except one, not so you don't watch it, you don't stare at it all the time. You have it there handy. So in other words, you can check it by just moving this up and down. That's all I'm saying. Of course, you've got to keep an eye on it. That might be shooting up. You need to modify stop or something like that. But you got your strategy protecting. That's what I'm saying. What happens is people stare at fixatedly. Let's say on a 15-minute chart, this up and down plays with their head. And as they're staring at it and it's going nicely and suddenly see some red coming and they panic and take it. That's just a couple of guys in the Middle East, in Japan, in Australia, I don't know, wherever, just unloading a position. Popped it down a bit before it pops up again and they're out. So you check it now and again. So what you do is this, you have it hidden like that. So we're all on the same wavelength, all right? And then you say, hang on, I haven't looked at it for about 20 minutes. Have a quick check, put it up there. We're still all right. Shall I modify? Quick check, go to that chart. What's this one here? Euro CHF. I'll show you what I mean by that. Euro CHF, because it's important stuff. This is remember, Anna-Marie's been doing this since September, hey? Not September, that's too long ago. A couple of months anyway, whatever she's been doing, 3-4 months. And these questions she's coming up with are very pertinent. No disrespect, the guy doing it a week. But she's had that experience to understand some of those psychological frustrations. And this is a psychological game. I'm just going to mute you all. So hang on a bit. Sorry, there's some racket in the background. I'll put you back on if you remind me. Had to mute. I lost my thread then. Okay, yeah. So this is just stuff I've picked up, which is because it's an emotional game. That's what it is. It's not learning all about, I don't know, Marabuza candles compared to I don't know, a doja or a hammer or whatever it is. It's an emotion. That's where it's got to be worked on. And as keep a look at it's coming off nicely now. That's all right. Anyway, the point I'm trying to make is I'm not going to stare at that all the time. I'm going to say, right, let's have a look. Is it worth? Let's have a look. Price is 64. Sorry, 96.04. Where's that entered? 16. 16.4 is 12. It's too close to put it to break even, but I might reduce the stop a bit, which I've done. But I'm going to say 20.30. But again, that's experience. I'll look at the volatility. Someone might be 25, another I might keep 30.40. If the momentum's very powerful, I might keep a 50-60 pip a break between, gap between the stop loss and TP. I look at the NAS, it's particularly volatile. I might 200, but then I'm getting pretty close to my some resistance, not my target, some resistance. I might actually partially close some, bank some of it, take some of my position off the table, and I might even break the rules and bring it up to 100 because it's starting to get a little bit noisy around that area. This is thinking a little bit on your feet with a bit of experience. It's not a set 2 and 2 is 4 game. And that's the problem. When one starts, understandably, totally all do, we're looking for Joburg to Cape Town. Durban to Joburg to Durban. Sorry. Right. 3 hours Harrismith, 6 hours Durban. Simple as that. It doesn't work like this. And that's where you have a trader with a bit of experience. And sometimes you put a 25 pip stop, jumps 26 pips, drops you out, and then shoots up 100. That happens. We don't know. There's millions of people trading, millions and millions, with enormous amount of variables. So whether that goes up or down, I haven't a clue. When did we last look at the NASDAQ? Maybe an hour ago. Where's it now? I haven't a cooking clue until I look at it. But so you have to take an overall view. And that's why we're going to try and get this conceptual understanding, because they're learning all sorts of stuff, but they're not getting the concept. You've got to get the concept. Buyers and sellers, once you get the concept, the emotions, the aspects behind it, it does make a big difference. It will, you know what I'm saying? And it does take a bit of experience, but the concept and it's a lot better. And have your strategy. Your name is Joe Soap or Mary Smith, and you got that balance. You're willing to risk this. So that per trade you're willing to risk is 10 units. Don't matter what it is, 10x. You work out your position size that 10x, because if you lose that 10x, it's going to annoy you, but it's not going to hurt you. And you work on that discipline basis. You're not going to be fretting all the time. Oh my God, now what I'm going to do, I'm going to break my account. Then you're overexposed. These sort of things. I don't think they're teaching the classes. That's practical stuff. Okay. Thank you very much, Dirk. Okay, so there we are. Okay, so not to stare all the time. And then moving the stop loss, some guys will say, don't move the stop loss at all. But that might have worked a few years ago, but everyone's got a smartphone now and are more susceptible to fundamentals, which they weren't a few years ago because they didn't have access to it. So winners can often be turned to losers. And you'd be highly fed up. We'll go to the daily. If it's to short the Euro CHF, just get this out of the way so you can see what's going on. You short the CHF there and there, and the TP is, let's say, down here. And you didn't trigger the TP by 10 pips, and then it goes right up there and stops you out. You want to be in a happy chappy. See, and the other thing, you've got to use you've got to think on your feet a bit. A lot of it's thinking on your feet. It's not great brains, thinking on your feet and a bit of experience. Okay, so that's important stuff. We're going to develop more on that. If I get it, remind me, keep me on track. Okay, because this is important stuff. US dollar CAD, again, experience. We got the CPI coming out on Thursday at 2 o'clock. Remember having a straddle session. If those don't like it, don't join. If those do, as long as you've got a funded account, not on demo. My problem is the Canadian tends to chase the dollar a little bit, the US dollar a little bit, Canadian dollar does. So sometimes I quite like it, depending. Remember, the Canadian is an exporter. I still think we can have a reasonably strong oil price. It might be a little bit stronger. But then lately, the dollar's been jumping up again. So this one at the moment, there's good it's good reason to buy the dollar against the Canadian. It's good reason to sell the dollar against Canadian. So at the moment, without even looking at the chart, I'm a little bit reluctant to go for it. A bit like the AUD NZD. There's too many similarities between them to give me an edge. That gets it to me at the moment. This one, the AUD NZD, is a little bit too 50-50 for my liking. I like the CHF because it's clearly strong. So I want to find a nice little weak one, see if I can get a decent entry point and sell whatever it is, the other side of the Swiss franc. You get the idea. It puts the odds in my favor, if you get my point. Okay. So this one, Rory's saying, I'm leaving it alone. It's broke through there. Will it maintain it? It's going to have some more resistance there. It's going to probably have a bit more resistance there. We're going to put your stop. There's so many hurdles between if you're going long, and there's no reason this moment to go short. There's far more reasons to leave it alone than to buy on this one. Hope you understand that. Are we good? Just check on that for a second. Yeah. Okay. All right. I hope we're good on that one. If you want any more, I can go back to it, but I wouldn't be going on that one. Okay. And another interesting thing, going back to the trades, doesn't matter, single, whatever. Let's say a single sent out. I mean, let's say everybody had to, that a law not to do it, had to go in at the same price with all the same volume. And then you spoke to all of them a week later. You'd be surprised the disparity in where they took profit. You get my point. They wouldn't all have made a profit on that. You know what I mean? They'd have got out at different times and the rest of it. And that's why I'm saying just think on that one. That makes sense. Right. EUR JPY. I think we missed the Swiss franc, that one. I want to get a better price. I might have missed it. Anyway, Euro CHF, Euro JPY. Not really, no. I mean, that seems to be holding. I get your point. See, I've got the crosshair there. I do it fairly quick from practice. Don't want to go too quick so you'd understand. You see, there's a bit of resistance, not much there. There's a little bit of resistance there, but then it's popped up again. Let's try the 4 hour. All I'm doing with all this, nothing clever. All I'm trying to do is find what the buyers and sellers are doing. A few sellers coming in, then the buyers are coming in. That's all I'm trying to do. Buyers are coming in. It's above all these. It's above the 10. Obviously, that is lower than that. So it's clearly an upward momentum. So I'm selling simply because it looks a bit on the high side. It might pull back a bit, but but you're going against the trend again. You're going against a powerful current. I'd rather be taking a profit there instead of selling it down. I'd rather maybe watch it come back to maybe this level and buy it. Probably where it is now, actually. 156. No, sorry, it's about 100 pips away. I'd rather buy it round about the 156. Once you got to always remember, don't put a buy limit in there because it might go further down. Look at that. If it confirms, start moving up, then you say, hey, the buyers are coming. It's attracting the buyers again. Go with the buyers back up again. I think that's probably a lot of that's just profit taking. I'm not sure it's going to be maintained, so I wouldn't be selling it now. Yeah, see, sell it come in. It could come back a bit more. We've got an hour. Where are you going to take it to? Let's try a 4 hour. Where are you going to take it to? You're going to take it down here. 47's not enough. Take it down here. 78 pips. Take off the spread. Make it 75 pip potential profit. Where do you want to stop? 65 pips stop. It's not enough risk reward. There's just not enough profit for the potential risk involved. Okay, Rickers? The most point is you got to see where I'm coming from that. And anybody there just knows mathematics. That's all you need. You can see them coming from. What are the buttons selling it? And once you find that out, is there enough profit potential in it? You know, I tell you what, Rickers, I've got a good job for you. Excellent. You're really going to enjoy it. It's only 6 hours a day, and I'll pay you 20 rand a month. You can say, I like your job, and I really like it, and I like the hours, but the profit's not worth it. You're not going to work for 20 rand a month. You get the idea. That's just stuff like that, you know. Okay, so any other trades? Because I want to go back to what Anna Maria and Nicky were talking about. Hey, where, of course, you're still learning. That's another one, guys. Everyone wants to take one lesson and be able to play the piano like a concert pianist. Ain't gonna happen. But what I try to do is get rid of some of this mystique and all the other detail stuff and get to the essence of the concept. Once you know the concept, the rest is basically number crunching. But if you're parrot fashion on the number crunching, you don't understand the concept, it's going to be an issue. As I say, we're not in the army. Jump over that wall. Yes, sir. And I broke my leg. Well, yeah, sure. Well, why do you do that, sir? Well, why are you so daft to jump over the wall without asking me why? You get the point. Yeah, the big fundamental news will do this. Now that you can't control. Can be on selling, but is it? I presume by you, I don't know what we're talking about there. Do you mean you want to enter? What was the trade? I've forgotten now. I have it written down somewhere. Where is it? EURCHF. Where the hell is it? 96.14. Now I wouldn't be entering now. It's about 14 pips below. Rather enter at the single price. I think you're chasing a bit at the moment, so leave that if you're not in. Gold, leave it alone. Definitely leave it alone. I try that, Logan, but I'm trying to use a bit of humor and a bit of comparison and try to use something everyone's familiar with, like relationships, a house or a car, and make it it's Nicky's house or Logan's house or whatever. And then it puts a smile on their face. And comedy's a great way I found of instructing. You know what I mean? It makes it a bit of fun and use comparisons, make them slightly ridiculous. And I just find it sort of gets the point through better than some sort of monotonous rationality. And most of life is irrational anyway. Now, oh, I don't know. How's the NASDAQ fight? Oh, excuse me. How's the NASDAQ after? Yeah, well, would do. Yeah, that's after. Exactly. Yeah, but it's a range trade still, the NAS, but we'll come back to that later. Yeah, right. Gold. Leave it alone. The dollar's jumped up the last couple of hours. It depressed the gold. Gold dollar might come off and put it up. It's sideways movement at the moment. It will be affected on the CPI either way, depending what figures come out. Gold, I would leave alone at the moment. Never mind, it's on the support technically. No CPI, no dollar index. Gold is a buy. No problem at all. Easy. Look at the technicals on there. Right in support. No problem at all. Buy the bloody thing. Why not? It's very risky to buy it now because it's a football to the fundamentals. If the DXY comes off, if the yields on the 10-year note come off, and then on Thursday, it's only 2 days' time, the dollar strengthens a hell of a lot because it's very inflationary, well above expected. Interest rate will rear their ugly heads again in the States and worldwide. The dollar suddenly goes strengthening through the roof. Gold will come flying off. Might even go through 1900. that is just a lap of the gods. That is total crystal ball. We don't know that. So that is not enough for me to get the odds in my favor, or they're a probability in my favor to go for it. I like to work on about a 60 to 65% probability. I sometimes look at 70 if I can get it. That's not quite the trader's century, and some is 70, 75, add them. Not very often. So try and work about the 2 out of 3, 65%, 2/3 yes, 1/3 no. That's good enough. 50-50, not enough. Hope that makes sense. And occasionally get the butte, normally on indexes, where it can make up for about 7 or 8 losing trades, which hit your stop loss, because it's such a beaut you get it because of volatility. That's why be patient with indexes or indices. And when you grab them, you grab that run big time. Hope that makes sense. Euro CHF, we explained that. Okay, yeah. Now, yeah, I just want to come back to, I forgot we talked about there, we went on, I did make a note. Something I want to mention there, I picked up Anna Marie was mentioning, I want to clarify again. I forgot what the hell it is, should have written it down. Damn. Any questions, Nikki, or on what you're talking about there? And Anna Marie, we talked about modifying stop loss. In the past, maybe not. I reckon a little as 6-7 years ago, we had TP1, TP2, TP3. And when it gets near TP1, clearly you move it first, because you're obviously going to hit your TP. But then you move it to TP2 and you move your stop up to break even. If it hits TP2, you move your stop up to TP1. I've had to fiddle around with that a little bit because the almost daily economic stuff that comes out, which we all have access to, which we did in the past because of the advent of the smartphone. So I had to tweak that, move with the times, I think they call it. Thank you. Thank you. Thank you. Thank you. Thank you, Anna Marie. All right. Does everybody understand out here? The ones who do, that's okay. But the ones who don't, everyone understand how you can make money on the way down. You buy a product for 10 Rand, you sell it 15, you make a 5 Rand profit. That's blindingly obvious. We all know that. We're all brought up with that. Sell a product for 15 Rand and make a profit when it goes down to 10 Rand. Does everybody know how that works? Does anybody, or rather, I'll rephrase that. Does anybody not understand how that works? How can that be? In other words, does anyone say, I'll take advantage of it, I'm going to sell it down and make a profit the way down? Why that occurs, I don't understand. Does anyone understand how you can make a profit with the price going down? I can certainly do that. Okay. Right. The way I use it, for the youngsters, I'm going to use Takealot. For the older guys, I'm going to use catalogs. Now, for the older guys, remember in the past, you didn't have Takealot or buying online, you bought from a catalog, correct? Same principle with Takealot when you buy online. Now, you look at Takealot or a catalog. It's a big, thick catalog, okay? In that catalog, there's thousands and thousands of different products. Are we all agreed on that? Now, right, Nikki, I'm going to pick on Nikki now because she's all understand it, but I just like to use a person. So I'm going to use Nikki, all right? Use Gerard if you like, but no disrespect, Gerard. Nikki's easy for me to say. Okay, so Nikki, right, wants to go into the catalog business. Right, what she needs to do now is to, yeah, how many products are in that catalog? It's a good one. Do anyone know Mika Hard Store? You know, they're still going there. You know, that sort of hardware store, Mika. It's a chain. They got thousands of products there. Let's take the catalog. Takealot, same principle. Now they got thousands of different products. Now you go out there and you got a pen. You got a gas braai, you got a phone, you got all these difference. Now, how many of each you're going to buy? You can maybe buy 10,000 pens, maybe 100 or 200 gas braais, maybe 500 phone. You know, you buy a whole load of them, right? And then you ship them all the way from China to South Africa, right? So there's a cost involved. And then you get an astronomically large warehouse, right? You got to rent that. And then for security reasons, all that valuable stuff in there, you've got to pay an effing fortune in security. Right. That is going to cost you a fortune, isn't it? You get my point. Buying all the stuff, having it shipped over here, paying for the security, the shipping, the buying, and the storage space, a fortune. On top of that, you don't know how it's going to move. You've just bought 20,000 pens and nobody likes them. You bought 1,000 show me phones. Now everyone wants to buy, and you're stuck with the product. You're stuck with them. Nobody wants to buy the ones you got. They're all suddenly like, I don't know, Nokia. Doesn't really matter. That's not way. And then the amount of capital you need is astronomical. So what do? You get somebody who's going to be an angel investor, means half their business they want in return, or you borrow the money from the bank. Now you got all that interest to pay on top of all that capital outlay. It's a nightmare. Aha, what's the way around it? You don't buy all that stuff, okay? What you do is you get suppliers, all right? You get supplier Martin, and you're going to get supplier Pietro. Now you got a couple. I'm going to get several. I'm going to use Gerard. Come on, Gerard and Pietro. So Nikki now, she's used her brain here. She's getting 2 suppliers, right? So now the capital outlay is piffle. It's tiny. She needs a little office to work from. She needs phones and computer to contact these suppliers. So what she does here is she advertises all these products, but she doesn't have them. She does not have them. I'm now going to show you how I'm going to sell short to you, Nikki. No, Nikki's the business person. It's Pietro I'm to sell to now. No, it's not. I'm going to make it Logan. Sorry, it's Logan. Logan is a potential client. Right, so I'm going to sell this pen, Logan. Hope you'll see it. And it's 10 rand and 10 rand the catalog. So Logan says, I would like to buy that pen and I want to buy 50 of them, right? I don't have them. So I say, absolutely, you buy those pens off me for 10 rand a pen. You send me what's 50 times 10, 5 grand or whatever it is, or I don't know, make it 10 pens. So you send me 100 rand for the 10 pens. You buy the 10 pens off me. I don't have them. Right. I go to my supplier Pietro, who's got them for 8 rand. So although Logan's doing the buying off Nikki, the owner of the catalog and all those products, she didn't have them. Now she goes to pick them up for 8 rand. So she sold short to Logan for 10 rand and she's bought them back from Pietro for 8 rand. That's a 2 rand per pen profit. Got it. So now we have a problem, Houston. Pietro has run out of pens. So now it's got to go to, who's the other, but Gerard. Gerard's got the pens, got the brand, the one who ordered it, got to deliver. You've got the money. International law, you have to, you go out of business. You've got to deliver to Logan that pen as ordered. He's paid for it for 10 rand a pen. So you've got to deliver to him. The problem is, though, that Gerard has got them at 12 rand a pen. So now you go to Gerard and buy them at 12 rand a pen. You still deliver for 10 rand a pen. Because the price has gone up to 12, you've made a 2 rand loss. So you've sold short the pens you haven't got, but you've still delivered them to them for 10 rand, but you had to buy them back at 12 because the price went up. You obviously think the price is going to go down because your supplier last year looked had plenty of pens at 8 rand. So you bought them at 8 rand a lower price and already sold them for 10. So when you sell short gold, you don't have it. You selling short gold right now for $1930 an ounce, and you're going to buy it back at the cheaper price. So you've sold it. That's in your money. That you haven't got it. So you pocketed an ounce of gold, 1930, and then you've gone out and bought the amounts of gold from your supplier at 1920. $10 an ounce is your profit. Have you got the concept? And that's used extensively in business. It's not just a fiddle to be in this market to make money on the way down, because it seemed like a good idea at the time, and I understand why. That's how Takealot catalogs use their business. Have we got it now? That's how it works. Now, why do we have it? Not for products you can, like pens, we have financial instruments. It's used for hedging. Right. Now, you are an institution with a large amount of investments in shares, right? You're in charge of a pension fund. That's very important, in shares. Now, pension funds are allowed to go into cash, interest rates, that's cash, allowed to go into bonds, allowed to go into equity. They're not allowed to speculate. It's too risky for pension funds, but they use this for hedging. Right. Now, they've got a very large position in gold, and they bought at 1850. They're going long term, right? Bought 1850. It's doing very well indeed. and their pension fund they've got to look after. They've got to be far more. That's why RAs have got to pay a lot of money to get out. Equities don't make the kind of returns this is because the risk is much lower, especially pension funds are not fantastic high returns. Only 10, 12, maybe sometimes more percent. They're very small returns because they have to take the risk out because a pension fund. Right. So what do? It's 1930 and then CPI is coming out. What they do then, they don't speculate it. They use for hedging or insurance purposes by selling short gold. So they come for the CPI, they sell short the gold to exactly the same amount of money as they got on long-term equity. So let's say they are wrong and the gold continues up. The money they make on their long position on long-term holding on gold is lost by their short position. They've hedged it. However, they were right. It came flying off to 1920. They've lost $20 an ounce by their long-term holding, but they made it back on their hedging short position at $20 an ounce. So they haven't made any money, but they haven't lost. They've hedged it. That's what instruments are used for on the practical terms. Where do you guys come into? You come in fulfilling a very, very valuable part. It's called taking the counterparty risk. So you're the speculator, they're the hedger. So you're trying to make a buck on the speculation. They're not trying to make a buck. They're just insuring their pension fund money for their investors. I hope you all understand what this is about and what is behind it. No, that's hedging on your own speculative position. All they're doing is they've bought Sasol share, Sasol cash, bought it equity, and they've got 100 million rands worth of Sasol. But I think it might come off. So they don't sell 100 million. They put a tiny, tiny marginal deposit down to short Sasol. So if it comes off, they've hedged, and then when it starts going up again, their long term, they've come down from that price to that price. The price is cheaper, okay, but what they came down, they hedged it by selling on the derivative markets, equals the same amount. So they make back on their profit in the short. If it continues up, they won't make a cent because all the money made on equity, they've lost their short position. So they come out as even. But they don't worry about that because they protect themselves. You're the speculator counterparty. That's why it's the same thing as in motor car. You don't want to pay £1,000 a month what you're paying for your insurance, but you're happy to pay it even though you're losing £1,000 a month because you don't want to have a fat crash or some idiot who runs into you, who's uninsured, so you can't get the money off him, and knocks your top of the range £1 million Mercedes Benz. You got to pay 200,000 to fix it up because the other guy's not insured, even though it wasn't your fault. So you have to pay your £1,000 a month or whatever you're paying insurance. Same principle. That's the point behind it. And I'm pretty sure a lot of people there didn't realize. I've been trading this and didn't realize the purpose of it and how how you sell short, how you can make your money on the way down. Is that all clear to you guys? Because I think these sort of aspects is not trained like the class. I'm not taking Stop My College Business away, but I hope I'm getting the concept, what is behind it. Because there's too much not knowing why and parrot fashion. Once you get the concept, you'll see things more clearly, and then you can play the game a little bit better. Okay, you can see why it's happening. Yeah, when you're selling it, you buy low and sell high. You get all that, but I mean that's when you're selling it. In reality, you don't know what high or low is till after the fact. This is practical reality. You sell the dream. Now my idea is to now help you achieve those dreams by having a bit of reality. Okay. My dream is to sit in a top of the range luxury motor yacht with 20 Vestal virgins in bikinis feeding me grapes. But I don't have to get that. I've got to have a little bit of reality to get there. I hope we've all learned some stuff there. Yeah. Vestal virgins. Don't know where to get that got from, but anyway. But yeah. Are we all? Is anybody there learned something there? I assume quite a few are expecting didn't know how why you can sell short, the reason behind it, and what the purpose of financial derivatives for is protecting, hedging equity, especially on part of pension funds, but big time high net worth players. You're picking up the counterparty. Remember, every time there's a buyer's got to be a seller. It's a zero-sum game. That's why you say, if I knew it's going to go from there to there, you make money. No, you wouldn't, because there'd be no buyers or sellers. if you know, and I know the price is going to go up. I know you, who we got? Rickus. Rickus got a product and he knows, and I know it's going to go up. So Rickus, will you sell it to me? You're always going to say, sod off. Absolutely not. However, Rickus knows the price it's going to go down. I want to sell it. Of course, Rickus wants to sell it. He knows it's going to go down. But will I buy it off him? Absolutely bloody not. The only reason I'm going to buy it off him because I think it's going to go up. We've got to have a difference of opinion. Otherwise, we don't have a market. And that's a speculator takes a viewpoint and thinks it's going to go up or down. And the better you get, it helps when you understand what's behind it and can think a little on your feet because you understand the concept. You'll find you'll be more on the win than loser. Remember, it's a zero-sum game. When you lose 10 rands, somebody else has won it. Who's like to win it? The guy with more knowledge, more experience, with better equipment and more money, etc., or the guy with no knowledge, no experience, no proper equipment and no money? Who's clearly like to? Who would you bet the odds is going to win on that one? Clearly. Oh, that's very good. Thank you. Very good point you made there. Yeah. Well, speculators, yeah. You're not investing, speculators. Absolutely. This is speculatory. In fact, I'm going to be quite honest with you. In Europe and America, you have to do a questionnaire to make sure you're more than aware you're in a speculatory high-risk environment. And it's illegal to borrow money to do it. You can't go and say, I'm going to borrow money at the bank, do speculatory. You've got to be aware of it. The pension funds are not allowed to do it because the risks are so high. This is speculatory. Why do we take it? We take the risk because we need to make a quick buck because we haven't got any money. I'm going to wave a magic wand. Logan and Pietro there, you got 50 million rand. Well, you don't need to gamble. You don't need to take high risk because you can get a decent return by paying an ultra safe interest rate. But if you've got a couple of thousand rand, you can't. You're wasting your time. So you've got to take the risk to get into that position. That's why the guys do Amazon and Apple, they had to take big risks to get to those positions. You can't get there by putting in a bank because you don't have enough money. Only when you use the bank's return investment is when you got enough. So you've got to take risk. And if you want to speed up, you got to, the more you want to speed up, the higher you want to return, the more exposure to risk. As simple as that. They go together. Some say I'm a risk averse, I want a high return. It's not going to happen. If you want to make, if you put in 5 grand and you want to have 5 grand in a couple of months' time, to get that kind of return, your risk profile must be astronomically massive. And if you don't want to take that kind of risk, then you're not going to get that kind of return. That's, you've got to understand it. Okay. You don't have to do 2 years reading of it. This is just discussed here as the concept. Okay. It's not, you don't have to, you can have an economics degree. A lot of people understand that. A lot of accountants won't understand it fully. It's just the basic concepts behind it and then working on your psychological head and then you'll get it. It doesn't take hours of bloody reading books. And be careful some of the drivel they put on Instagram as well. If he's posing around in front of a Learjet, it's no. And if I was in a Learjet, I've got better things to do with my money if I can afford a Learjet than posing around on Instagram. You know, I'd be too busy eating the grapes being fed by the Vestal Virgins by spending good time and effort posing on Instagram. You know what I mean? Oh, sorry. Yeah, I forgot about that.
Roger, sorry, I'm taking another track. You put it on us to look at the United States 10-year bond chart.
Yeah.
Exactly what are we looking for or looking at? Because I'm on this chart now and I see the dollar index on the right-hand side and I see that the graph on the left-hand side, and there's a little P there, a blue P in a blue dot with a P inside. And if you put your cursor there, it says 3 inside up.
A blue dot with a P on the 10-year note.
Yes.
Yields on a 10-year note. I don't see it on
Yeah.
mine. Don't see it on mine, but I won't worry too much about that. Some of these Ps, oh, I think I know what it is. Yeah, they often have, when you click on it, some information. A bull and a bullish engulfing candle, probability might get some upside. Ignore it. Don't take any blindest bit of notice of that. Just look at the price action. That's all you look at on that
only look at
chart.
the price action. Okay.
Only look at the price action. Don't worry about anything else. Ignore it. Price
Okay.
action. Right. Now we got that. I'm glad you brought this. I want you guys to do what Nikki and the others do, to ask these questions, because it's quite a revelation. Nikki on Friday at Anna Marie Now, finding out that most people didn't know about the concept of this is a speculatory, why they're doing it and why selling short comes in. And a lot of the guys, I'm pretty down sure now, have been trading for a while, weren't aware of it either. And that should be cleaned up. So I'm so pleased you did it. I think clean up for a lot of people this. Okay, now I've got that shared now. I've put it up for you here. It's a 10-year note. What's it mean? Right. The bond is borrowing money. You got a bond in your house, you're borrowing money. What's the yields on the bond? The yield to the bank on the bond is 10%. That's the interest rate argument. I mean, I don't say, oh, mine's 9.1. I don't care. I'm using this as an example. So they're in opposite directions. The bond goes up, the yields go down. The bond goes down, yields go up. Simple as that. They call it the paper. It's a paper. Like a 200 Rand note is a paper. It's got 200 Rand, and it'll always have 200 Rand on it, but the value of that 200 Rand note changes. That 200 Rand note 5 years ago has got a different purchasing power to that same piece of paper with 200 Rand written on it that it does today. That's called inflation. Right, the bond will jump. That's the paper, the notes. I think it's $1 million, or is it $10 million, something like that. But it's the most traded note or paper, as they often call it, in the world. Okay, right. We're not worried about the bond price. We're worried about the yields. Why we worry about the yields? Because the yields affect gold. They affect shares, etc. Why do they affect shares? We'll start off with that. Right, Anna Marie. When you go into, let's say, I don't know, a share, there's a bit of risk involved, isn't there? You hope for a higher return because you take a bit of risk. You don't know a Tesla. I'm not talking derivatives. I'm talking long-term equities now. Nothing to do with derivatives. Equities. You're going to buy equity through the past many years. If you buy equities, they've shown they beat inflation and all the other instruments. They do pretty well over a period of time. Okay, so you're willing to do that. Okay, now the problem is there is a bit of risk involved. Now, when you put in the bank, that's government guaranteed. Now, if you can put money in the bank, and let's say you can get a 20% return on your money by with no brains, no nothing, no risk, no effort, nada, nothing. Why would you go and put into equities to make 22% with all the risk and effort? To risk all that for an extra 2%? No. You'd put your money in the bank, clearly. So the higher the equity goes, the yields go up, the returns go up by making no sodding effort whatsoever, it's going to have a negative effect of taking a risk as in shares. The other way around, so go in opposite direction. Now the yields come off from 20 to 2%. You put the money in the bank, you're going to get 2%. It's a lot of money's going and you're getting no returns. But you can get maybe 15% on your equity. It's worth now taking the risk. Got the concept? You see what I mean, guys? That's why they go in opposite directions. So you need to look at the yields. Yields go off. It's good for shares. And the same principle on gold. Gold, you're earning no opportunity cost, mentioned before. You earn no interest, no dividends on gold. So if you're taking a risk by buying gold, and the yields are going up a hell of a lot, by taking no risk, you're getting just as good for a return, or nearly as good a return as gold by taking a risk. Why would you do that? So you'd get your money out of gold into the yields, and therefore it's going to be negative on gold. However, let's say the yields start coming off. You realize the opportunity cost of not being in gold is 1% because the yields are only 1%. You're wasting your time. I'd rather take the risk going to gold with higher capital gain potential. I'll buy gold. Gold goes up. So gold, I just want to explain so you know the reason why. Gold and shares and indices go in the opposite direction of the yields and the dollar index. I hope you all get that now. Why? It's no good telling you that happens. Why? Buy euro dollar. Why? I don't know. I just do it. And that's most people do. Single buy euro dollar. They spend a lot of money. That's another thing we get my head around. They spend 1,000 Rand a month to learn how, never even look at it, and then put 500 Rand in their account. it shows how emotionally irrational we are as human beings. It's like me saying, I'm going to charge you 100,000 rand to teach you how to drive, and then you buy a 500 rand a bicycle. Why? You see what I mean? Those stocks, Taylor. It's not about stocks, though. It's just understand. I tell you what now, if you go to work, you got to get to work, and you're under pressure at work, and you got you got to work 8 hours a day. You work, as in work, for 8 hours a day under pressure and all the rest of it for 10 grand a month. Or I'm going to pay you 9 grand a month for not coming to work. What would you choose? I'd rather get a slight less salary, not come to work. But if I say I'm going to pay you 3 grand a month not to work and 50 or 30 grand a month to go to work, then you go to work. You see what I pick? That's the same sort of principle. The higher returns for not working, what is less incentive to work. The low returns, like in the yields, the low returns is more incentive to go to work. You get the concept better now.
Roger,
Yeah.
when you say yields, this is going to be a very obvious question, but are you referring to the red on the top where this says US 10-year 4 point whatever, and in the red part, are you looking at that part?
Yeah, but the red means it's come off. That's nothing else. That's just come off. It's come off. You can see that, and now it's going up. But that's just a candle coming up and down. But the yield on the 10-year note or the interest return, you're going to give me 100,000 rand right this moment, Nikki, and in return, I'm going to pay you 4.017%. That is your return. That's your return. That's your interest. That's your yield return.
Oh, okay. So you actually, because I was a bit confused on how to read the yields. So you actually
Yeah,
look
but
at the black
It's simple as that's your return. Money's got a value. That's why we had so much inflation, because they brought the interest rate down to nearly 0%. So it's free money. Ask yourself this question, guys. You've got 100,000 rand cash right in your bank account on call, and you see a product going for 100,000 rand at 0% interest rate. Would you take it over 2 years on terms, or would you buy it cash? Who would buy it on terms and who would pay cash? If anybody said take it on terms, I would question that decision powerfully. There would be absolutely no point in paying for it in cash. You'd pay for it in terms, because you're paying it for down the line money, okay, without eating your cash, and it's not costing you anything. The only reason why you say you pay cash is because it's cost you money to have it on terms. If it's 10% interest, you're paying for that privilege. Does that make sense? Have you got the concept now? Because do you know what worries me? I've said this many times, Nikki. What the human being wants the most seem to be the two things they know the least about, and that's the opposite sex and money. You overhear conversation, 90% plus is about grumbling about their spouse or grumbling about money. And it's two things they know absolutely sod all about. Well, I'm not going to start teaching you all about the opposite sex. There's probably more experts there on it. But on the money side, we're not talking economic degrees here. It's the basic concept of it. It guides our life. And the majority, maybe kept that way by the powers of be, I don't know. But the majority of people know nothing about it. If nothing else, hope this course teaches about money, whether you use it or speculate or whatever, has some idea about it. But it's terrifying how few people know anything about the system, how it works. And that's why they're conned into sort of extreme debt by buying liabilities through derivatives. They're buying a derivative that goes down in value, like clothes, washing machines, shoes. These lose their furniture. They lose their value, and you're paying a phenomenally high interest rate to do it. When you put a deposit down, you go to the furniture store to buy stuff. What you're doing is it's a derivatives. It's a leverage. You're putting a margin deposit down to buy it. You're leveraging a liability. This, you might have a chance of going up, even some go down. There, I'm guarantee you walk out that store with that furniture, you sell it back in a month's time, it's gone down in value, but you're leveraging that liability. That's why people are in debt. They don't understand that basics. I think it's vital. They should do it. Guides your life. Guides your life. How to fix a car. I don't know. Stuff that's practical use to you. Absolutely. They teach you who invaded UK 1,000 years ago. Fat lot of use that is. It's nice for academic interest or aesthetic pleasure, but it's not practical. Sorry, Licky.
I just wanted to ask, so the higher the return, obviously the higher the yield will increase by. And if that amount is lower, then obviously that means that the dollar might decrease. Is that correct?
I think what you got to understand the concept, right? Trying to remember it. You don't have to remember it. You got to understand the concept. It'll be immediately obvious. Basic thing is this. Now, you've got 100 grand and you're going to put in the bank and earn interest on it. The interest is completely risk-free, and you're getting that interest rate of 10%. Okay, so for doing absolutely sod all, you're getting 10,000 rand a year. Remember, it's per annum interest, always per annum. 10,000 rand per year for doing nothing at all. Right. Alternatively, you can take that 100,000 rand and you can put it into gold with no guarantees. Right. But you're doing that because you think you're going to make 30% per annum. You get it? Now, if that interest rate goes up to 30% per annum, okay, what would you do? Would you take a high risk of buying gold, or would you take no risk to get that 30% put in the bank? Do you get my point? So the higher returns for making no effort, no risk, no nada, is compared to take a risk, you're going to take the no risk area, obviously. So what makes you want to take the higher risk area? Because the potential returns are much better than the high risk, because the returns on the no risk are so low. That's why they go in opposite directions. The higher return for doing nothing is going to have a negative effect on shares and gold because there's a risk attached. The lower risk, the low returns are doing absolutely sod all, is going to drive the money into the stock market and gold. And a lot of that money drove into the bull market, to the stock market, not because the shares often, remember it's called the secondary, not the primary market, the secondary market were driven up. A lot of it because the returns in alternative areas like interest rates were so low. In Japan, it's 0.1%. In Switzerland, it's a little bit more now, but over a year ago, it was a minus. So you put 100 grand into the bank in Switzerland, Japan at one stage, but in Switzerland, and in the interest rate you're getting, you would get less than you put in because they're negative interest rates at one stage. Now they're positive. And you put your money into Bank of Japan, it's 0.1, it's 1/10 of 1%. So that's going to make alternative investments more attractive. But now I'm going to put the interest rate up to 25%, and you've got 5 million. Make it little as 2 million. Actually, make it 1 million. Yeah, it's 25%. What's that? 25% of that is 250. Yeah, 20 grand a month. You might be able to live on that without taking any risk. Why would you want to take a risk? Do you understand the concept now? Once you understand the concept, the other stuff you don't have to remember because it makes sense. You can work it out. So when you learn parrot fashion, where the problems come in. That's why a lot of these exams we take, I don't agree with them. They should teach you where to find out the information, because I think it was Benjamin Franklin says the best thing is to know, if you're clever enough to remember it all, the second is to know where to get information. If they can teach you where to get that information and you got access to it, you'd have to remember all these things, because if you're not sure, you can Google it or go and get that information, as long as you know where to get it. But just to try and say, and you remember it, right, you cram for the exam and you pass it, great. And then you ask the same person the exam again a month's time, they'll probably fail it because they crammed, forgot about it. What's the purpose of that? Rather get the concept, it makes sense.
Yeah, I got the concept. I was just struggling to read or how to read the charts, but I got the concept now.
Okay. Don't worry about all you're interested in what the yield's doing. Don't worry about the bond yield's doing. What's the dollar doing? So now we're going to go back to the chart now. I can just knock that off. Actually, it's going to do the dollar index to you as well. Some guys might not have it. So please copy and save the one I just had. I'll copy and save this one for you. So not save, but copy and paste it for you. Please save it. And the economic calendar, I'm going to do the same. Please save it. So, and have it minimized. Bloody hell, did the wrong thing there. Have it minimized when you're trading, so it can easily be referred to. Like I could refer to. I have two screens, but one just minimized on the same screen. That's another guys come in. That's another one that gets me. They come in with 500 rand in their account with a phone. Nikki, be honest. You don't have a laptop, you've got a phone, you've got 500 rand in your account. Do you think you've got a good chance of making a lot of money? What do you reckon?
No, I'm already struggling on my on my like account, and I've got like what 2,000 nearly, and I'm still struggling.
Yeah, but the point, you need some knowledge. I presume you got a laptop. You need it should be theory. It shouldn't be after this. You need knowledge. You need the equipment, and you need the capital. Those things you need. And to try it without, well, I don't know. It's so utterly blindingly obvious. I struggle to wonder why people don't seem to see it. Well, I do actually understand. It's the dream of something for nothing. And unfortunately, the less educated around the world, not just over here, around the world, unfortunately, are falling for this something for nothing. I've got nothing to give, I've got everything to want. That's usually, everything's got to be a fair trade-off. If you've got nothing to give, unfortunately, people can avoid you. If you've got lots to give, people are going to want to go to you. It's the way it is. That's why I say the trouble is always the poor get poor. Of course they will, because they haven't got anything to give. It should again be common sense. Right. Get the candles. Okay. Now, how do you get the candles, Roger? I have a graph. Now, how do I get the candles of a graph? I'm not sure what you mean by it. How do I get the candles? I've got a graph.
Okay, when you opened your United States 10-year bond, you had candles.
Yeah.
On my computer, I have a graph. Is it possible to change the graph to candles? Or have I got the newer version? Because I only downloaded it the other day.
So from a line chart to candles, yes, yeah, you can change from a line chart to candle. Yeah, of course you can. It's a chart. Or I missed the question.
Yeah. Oh, I see it. Just below my graph is no. I haven't got candles, but that's fine. I will look for my candles. Thank you.
Farney will help you out. You Farney, and I have, I think, a bit of a WhatsApp going. He'd probably be able to Zoom with you after 11 o'clock and show it to you. Okay.
Okay. Thank you.
Yeah, fine. Okay. Right. Okay. I think that's been fairly useful. We can have a check the trades, but I'm sorry to spend time on it because behind the course going all this stuff and the practical stuff they need, they're exhibiting the lack of knowledge on it. So I want to clear that up. Very important, not parrot fashion, understand the concept why, and things will become clearer. Hope we gain from that. Let's have a look at this stuff as we speak. Actually, here's a trade possibility. Is this one here? Let's look at the weekly 4 hour. Looks like a bounce off here. I think this is. I know we lost the other day. Here's another. It's all psychological. I lost that last week. Well, that was last week, or I won on that last week. Let's go in again. Well, you might have won the last week on it. You might lose this one, and vice versa. It's a completely new day. You bogeyed the last hole. Let's see if we can birdie this hole. I think there's a possibility of upside on this one.
Roger,
Yep.
sorry, can you just change your screen so we can see what you're looking at?
Oh, I thought I'd done that. Sorry. Thank you very much. I thought I'd done that. Beg your pardon. Can you see it now, Pietro? Oh, it's Gerard.
Yes, thank you, Roger.
Oh, you can.
Yes,
Okay.
yes, thank you.
Right. Sorry. I saw the 4 hour. It's come down here on the daily. It's there. Look at the weekly. It's in the buy zone. It's causing a bit of a problem, the 10 weeks, sorry, but it's 80 pips away. So it's not exactly, if you make 80 pips, you're not going to come and shoot me. So I see the potential buy there. What do you reckon, guys? Pleasure, Kolui. I'm getting a feeling a lot of people have learned a bit today, even the guys who've been trading before. In fact, I would say probably about 80% might have picked up some stuff there they weren't sure of. Okay, Pietro quite likes it. Anybody else quite like it? Oh, I'm definitely talking about a buy. That's a good question. Anybody want to sell it? There might be. It might be right. It might come flying off. I might be wrong. I'm not saying you're wrong, guys, but I'm looking not a 50-50. I'm looking at 60 or 65% possibility of upside. That's my view. That's what I'm taking it. But I've got a stop loss, get correct volumes in case the thing comes off. That'll do. So it's just below these guys here. And the TP we can take up to here. Can we score there? 108.10. That might play around with it. Might be a bit of a squeeze. We'll have a look. Trouble, I don't know why we do it half the time, because people take their profits so quick anyway. They don't even worry about this figure. Maybe slightly tighter. Make it 105.65. Don't want to extend the TP anymore. That's still like cheating because it's at the previous high. It's a bit of a squeeze, but I don't think it's a big train smash because most of the guys are out before that gets there anyway. And you can always move the TP if the monument, if the movement, momentum, sorry, the momentum is going up, you can always move this TP up there if you want. Then you definitely get a risk reward. Yeah, I'm definitely looking for this for a sell, Chris. Absolutely. Are we all agreed? Sell the CAD JPY. Are we all agreed on that, guys? Do you all like a sell on this one, guys? Mr. Slabbert, I think you realize I wasn't being a little bit on the flippant side, though. I could come back to Murphy's Law, Comite's curse, and bite, and I get stopped out, but no, I'm looking for a long. Anyway, anybody like it? I'm going to say I quite like this, but before I'm going to send it out to the company to post, I want to get 3 or 4 people who also want to join me on this one. Who wants to join me?
Before I
Not
give
on
an answer,
demos.
can you
Yep,
just
go.
explain it on the 4 hour, on the buy on the 4 hour?
It's come down to the 10-day and it's holding. It held before and it's holding on the 10 times, not 10-day, 10 4-hour, and the 10 4 hours holding, and we got a bounce. And I prefer the Canadian to the Japanese yen on top of it. Mr. Paco likes it. Good man, Mr. Paco. Gertrude likes it. Chris likes it. Logan likes it. Yeah, why not likes it? I saw his Chris then. So, right, Nikki, that's my answer to that one. Do you like it?
I like it. I struggled to see the bounce, but that was more of a theory question.
No, you must do. You must ask these questions, Nikki. That's like others. Spot on. You got to know why. I'm not doing you're not in the army. I'm not just doing because you got to go into it. You know, I'm doing it for a reason. If you like the reason, if you don't like the reason, you don't do it. I'm giving the information to make that decision. And once we get that concept clear, people say, because we put a trading idea out. If it goes wrong, I'm sorry about that. I try not to, clearly, but unfortunately, I can't guarantee that.
Just
And I know-
re-explain the bounce for me.
The bounce. Just get this sent out first. I've got to put in myself. Don't let me forget. I've got to put in myself as well. I often forget that. Where is it? Just give me a moment here. Oh, come on. It's not happening. Ah, the bloody thing's not happening. Come on. Try again. If at first you don't succeed, give up. I mean, try again. Ah, bloody thing. I have to reboot. Okay. Just a second. I've got to. Just Sorry about that. Just give me a moment here. Problem on the WhatsApp there. Just have to be patient. Just hang on. We'll go over 11 o'clock. I hope you can stick around because we're going to get this trade sorted. That's the copy and paste. Why is that? Ah, at last. It's slow. Okay, right. Sorted at long last. Bloody hell, that was a pain in the backside. Okay. Right, long yes. Okay, fine, like okay, right. Where were we now? Okay, missing out on this thing. What's it? 129 jumped up anyway. What I'll risk on that on 1,000, that's 600. I'll do 0.15. Okay, CAD, DPU. It's slow today. I'll put my TP in after 11 o'clock. I haven't got time to do it now. I want to get in them. I'll put it in just now. Okay, right. Right. So there it is, if you like it. Levels. They do like it. Give me a second to the levels. What's it? Call it 130 and 195. Just give me a second. I'm just typing it out to be sent out. Uh, 520 and 4 times 195. That's 800 minus 20, which would be 780. There we are. Good stuff. Yeah. Good point. Good point. Good point. Trade room tomorrow, because although we've got Women's Day over here, so did the JST market, we don't even have them anyway. All the other markets are going to be open. So tomorrow I'll be doing a trading room, then I'll go out and do something else. I'll probably have my phone with me, but in case anyone asks anything, I try to keep that. But then I might not hear it, or I don't know what I'm getting, whatever. But in theory, after 11 o'clock, it's a day off. But if someone asks a question, I enjoy what I'm doing. I mean, Peter comes in, he's looking at the euro dollar, and I haven't had my phone handy, and you know, etc. Even out and about, I've still got my phone handy. I have to check on the phone, but I can on the phone. I'm experienced enough to do it, even if I'm not in front of the computer. But yeah, I can. But otherwise, in theory, it's just a trading room and then knock off till Monday. Okay. Okay, so I hope you've all got that one. Place the order, etc. Okay. And because it's Women's Day, I have to work. But the following day, guys, is Men's Day, where the women have got to work and we get the day off. So don't forget that. Okay. Very important to remember that. There's no sense of humor coming this, Pietro. That's completely serious. I've just ordained that. They do indeed. We're such victims, hey, Logan, us men. We're such victims. Home rule for men, I say.
Most ladies will say daily, every day is a men's day. They spoil the brats.
Yeah, well, yeah. No, I disagree. I just feel such a victim. Anyway.
Don't feel too sorry for yourself, Uncle.
Oh, yeah. Oh, God, I do. I do. Just such a tough time we do have. Us sensitive men. Anyway, moving along. Okay, so we sorted that. Yeah, any questions before the bouncing? So, what? Oh, the bounce. I hope you all got it. Knocking that off. The bounce. Bounced here on the one. Look at that. This is the one on a 4 hours. See, it works on all of them. Bounce there, bounce there. That's why you must all have them. There you are. Bounce there, not every time, I know, but look at that bounce there. Go to the 4 hour, it bounced. Bounced off the 10-day and the 100-day. Daily, it's holding around these levels here, which isn't just in the buy zone. Weekly, don't stuff me up, Mr. Weekly. Nah, good. All right, this is a bit of an issue there, but as I say, it's all right, it's fairly close, but it could take that out. I hope it does, but it's still in the buy zone. So I thought that's a good trade. There's more to say go for it than not. You're not going to get 100% guarantee. The trade of the century might get 5 out of 5, but 3 or 4 out of 5, I'm happy to go for it. Oh, you see, okay, got that. I hope so, Logan. No pressure, no pressure. That's exactly it. It's like support. There's another one, Nick. You're trying to say quite simply is this. Just get this trade out. Oh, by the way, the VIP group. If anyone's not a member and you've got 2.5 grand in rands or $150 or more, let me know and I'll put you in my VIP group. Just get this trade sent off to them, fresh off the press. So get it first. Okay, you get daily open economic fundamentals, other bits and pieces, occasionally the extra trade, but the trades usually come to you first anyway. So it's worth having. No cost, but you got to have a minimum balance. The reason why some have to have some money accounts, you can take the trades. Half the time, it's no good. People say, I want more trades. We haven't got enough money. What's the point? You know, it's not point having 3 trades. You haven't got money to go for 1, never mind 3. So again, it's most people are purely on their own emotion without thinking, you know. Don't like your Lambo, let's have a look at Ferrari. But Mr. Potential Clients, you've only got 10 grand. These are £1 million each. You know what I mean? What's the point? Support is key. Completely is key. You're buying off the floor, hopefully selling somewhere near the ceiling. You're selling off the ceiling somewhere near the floor. Exactly. A little bit more to it, but that's the basics. Okay. Any questions? Oh, the Euro CHF. Just have a quick check before we knock off. Euro CHF. Brent's coming off a bit, eh? Euro CHF. It's holding. So in slight profit. Too early, in my opinion, to move the stop. CHF JPY. We're not in that. Just seeing me happening there. No, that ship sell. We missed that. Well, I didn't miss it. I want to get a better price. And it didn't get there. Pity. US dollar yen. Oh, NZD CAD. That's right. NZD CAD. This one's the sells popped up a bit, but hopefully it'll come right. And the dollar yen was obviously a buy. It's holding nicely. That's a profit. You should all be in a profit on that one. Better be anyway. Okay, modify, protect yourself. That's a nice profit. We got it 142.20. That's nearly 90 pips in profit. Make sure you're protected. Get your stop maybe 142.80 or something like that.
Roger, just the last one, Euro AUD. What do you think on that for a sell or, I mean, for a buy, or did the boat sail?
Remember we mentioned earlier on this one here, it's coming off a bit. Remember I said don't short it, guys. Remember it's Pietro, don't short it. You don't know how far the retracement, the profit taking pullback has occurred, and already we're going to a bounce. Good question, actually. So anything I don't like, you find you to ask questions that go above my pay level at times. Makes me feel a bit foolish. No, I'm just joking. They're excellent questions. Let's try the weekly. It's taking out the high there.
Because on the EJ,
Yeah.
it's 28 pips above what I would like to enter.
And the EJ, definitely, yeah. 30, in fact, 30. Definitely the momentum's up. Whoa, can we get something out of this? Where are you going to put your stop? Where your TP, I mean? You say you got some upside there. There's some resistance here. I'm going to be honest. I like your idea. I'm just scared. I'm going to be caught on some scared. But we're able to go this far up. That's only 20 pips. It's not worth it. I'm scared, but I see the upside. There you are. I'm sorry. I'm not very scientific, guys. I'm embarrassed to say, but I hear what Farney's saying. Clearly, it's taken out the previous highs on 1 hour. On the daily, It's taking out this guy here. It's held there. Look, and the bounce is there. I'm just scared, but that's not very scientific economic reasons, but I'm scared. Anybody not scared want to do it? Because technically it's looking like more upside. Yeah. Anyone want to do this? Anyone a bit more Rambo than Chicken Rog? Scared with it, yeah. And the month is giving me a little bit of worry as well. I know it's a month of long term, but that's a hell of a thing. But I don't know, I'm just a little bit nervous of that. I'm gonna be a chicken cluck cluck job. I'm gonna leave that. But clearly it's not a bad idea. If you feel rough and tough, you can go for it fine. You know what to do. Gerard might want to join you. You can do your own calculations. That's not a problem. But I'm gonna chicken out literally. Okay, trade's not too bad so far. May it continue. May the force be with you. Okay, guys. Any last questions, or should we call it a day till tomorrow morning? Don't forget CPI Thursday. I'll remind you again of it tomorrow. Those who want to do it for a 2 o'clock session on the CPI on Thursday. Thoughts on Apple? Good question. What about CPI on Apple? If we can come down to these levels, we can start buying it. I'm looking to buy Apple. I think this glitch is not going to be long lasting. Apple's a very big brand name, very successful company. If you've got a long-term portfolio, have it as part of that portfolio. And there's a lot of brand snobbery on it. If you're using Microsoft in UK or New York or whatever, they look down the nose at you. You know what I mean? Microsoft, not Apple. You know what I mean? So I think it'll bounce back up again, but I'd rather get the CP out of the way. I hope it'll wait for us and maybe get the CP out of the way and look at for opening on tomorrow. Thursday, H3 opening. We might hope we get a decent price. So I'm looking at that as a buy, but keep on the sidelines till we got the CP out of the way. Okay. And GBPNZD, always worth hanging on for a possible trade. GBPNZD, you want to sell it? Was too strong. I won't be selling it, no. Oh, NZD, sorry, wrong one. It should be on the same basis, broken through as finally came up with. What's the target looking like? Bit of resistance on the monthly, but I take your point. The momentum's clearly upwards. I'm just scared. It's so high, I'm scared. And I've done that before and I missed out. It's continued up and up and up, and I'm scared. But personally speaking, I'd rather buy it around about this level here. Oh, selling it. No, I won't be selling it. No, it's too strong. The momentum's too strong. 4 hour the buyers are coming in. Sort of talking about a buy, beg your pardon. There's no follow through. The buyers come in. Certainly wouldn't be selling it, no. I'd rather buy it, hopefully a better price, or risk missing it, but I won't be selling it, no. You're going, who called that question? Edwin, no, look at that momentum. You're going against a strong tide. Buy the pullbacks. I wouldn't be selling it, no. And the profit taking pullback is only 30 odd pips before the buyers are coming in again. Definitely not. And GBP is a maverick, quite right. But that's whether it's a maverick or not. I wouldn't be selling against that very strong trend. Okay, guys. Hope that's good. We'll go over the stuff, reiterate stuff that we sort of got the hang of, but need to force it in a little bit more to make sure we fully understand it. Maybe tomorrow, and then get some decent trades. And we've got 3 doing okay. Hope the CAD 4. We're doing okay. That's the main thing. The trade room guys who following the trades, not doing silly things, take too quick, getting the right positions, that sort of thing, should be doing okay. If you're not, you're definitely doing something wrong. Okay. Thank you, Logan. Thanks for the support. Thank you, Sharon.
Thank you very much. It was really informative and I love it.
Thank you very much.
Contributions. Thank you, Rog.
Thank you, and all the contributions as well. I wouldn't be able to do it without you guys coming up with the questions. I can't read your mind what question to ask, particularly those guys who are like Anna Maria and Nikki who interacted. Thank you very much. Catch you tomorrow.